This reward can be something like an investment point that would be able to business with a particular question. And that's the mobile number which is registered with the bank. But this is the kind of problem that we are solving. And this is not that we are not aggregating it per se. What we are doing is we are showing the currency on the payment page. Let's say you have a single point, you can read in 1 year.
Thank you so much for joining us. We will be starting in the next 5 minutes. Requesting everyone to kindly take a seat. Possibly in the front row, since there are we have a number of us. We'll start in the next 5 minutes. Thank you.
Yeah, that is important. So, as in the whole business is actually trying to so that is already started the reward and it's for a scale of the service that was here. Then it is the fruits of this budget. Check it. Yeah, create
for producing their content. They require money for money. So we're building a B2B lending system.
We have one kind of for the non-merchant.
We are building a B2B lending system for directly businesses and creators. But we are building the lending system for blockchain. We're just getting started.
That's why they're saying that you can check out option, you can have a payment rewards kind of thing enabled. For the retail directly go live with them, and parallelly there can be the other merchants which are private pay. We can do them in a seamless convert because there would not be any direct integration that are required because we are directly live with the payments. So it is just a sorted key that is easy to use and they can get the revenue based on what it is. But then we are not bothered about that. What we are really looking forward to first create awareness, then have a customer database. It doesn't make sense. And then eventually we need to affiliate the balance. So we have no, BSC because because ultimately your stocks are going to be ready. For BSC, and all they want to be placing them. For BSC, once I start, I can't sell it. So yeah, you cannot sell it. Once you close the loan, then only you will be able to your team will be the financial speed. 50% on
So you spent like a decade in sales.
We are aware of that.
Interesting.
Although it is there, what do you get? All the people are passionate. You can have you want to have a pair of things. You can basically you have similar background and say same background and you have created your platform. So once customers are look forward to customers
So how does it work? You first approach a publisher and then you start writing.
Speak to the question from on stage.
Acha. Which ones? Interesting.
Okay, we're starting.
Hello everyone, this is Shreyas, your host for the day, and along with me, Saarathi is here, who will be co-hosting with me. We essentially host a podcast called Fintechkibaat, and this is a part of one of the events that we recently started doing offline. So earlier we started in Mumbai as a part of an experimental offline series because online COVID made us too much in overdose of online, and we were like, yeah, kuch alag karta hai. Every podcast is online and it's a noise, right? Everyone is making noise. So we wanted to do something offline, and this is a part of that series. Today, from speakers point of view, we have three great speakers with us: Chiranth, Patil from Riskcovry, Mr. Arvind, Nhata from Saarathi, and Mr. Nishchay from Jar. So you see the impact of the brand that he has created. That gold has become synonymous with Jar for me at least. So before we start, and I hand over the mics to them, just to give you an overview of what we are planning to discuss today. It's not going to be a very structured conversation. It's the three main areas that I personally planned on covering, and I think speakers who agree with me on the areas that we are looking at. One is essentially the main topic is to address on how essentially current startups should look at the upcoming funding winter and economic crisis. Like everyone is right now panicked to the layoffs, and people seeing the funding being dried out and investors' money being pulled out of the country. So that is something wherein we would want to understand from these gentlemen on how essentially what is their perspective and how essentially a startup should look at it, or how they are personally looking at it. Secondly, since all of these three gentlemen have scaled up companies successfully on a B2B and a B2C side, so we want to understand how essentially they did it and what are some of the anecdotes and tips and tricks that they can share with us. And including that, we would also want to hear about their entrepreneurial journey and all of that. So if at any point you have a question, raise your hand and we'll be more than happy to take it. Or you can reserve it for the after the event if you are more into that. But yeah, you're open to ask questions during the event as well. So we just get started. I'll hand over the mic to you. So I'm so sorry, we just have two mics, but we have to manage. Yeah, sorry. So we'll start with Mr. Chiranth here. He's founder of an insurtech company called Riskcovry. Chiranth, we would love to understand from you what exactly you do at Riskcovry, how did the idea of that specific business model came to you, and some anecdotes about how did you scale that Riskcovry business up to right now where you are at. So like you've been at it for almost 3.5 years now. So a bit of insight on that journey.
Sure. First of all, thanks guys. Pleasure to be here. Thanks, America. Appreciate the opportunity. I am Chiranth. I'm one of the co-founders of Riskcovry. Riskcovry is a insurtech infrastructure platform. That's a mouthful, but think of us as an insurance in a box, right? The closest analogy would be what payment gateways do to sort of brands and merchants who want to accept digital payments on their platform. They don't necessarily go and build their own payment gateway. You partner with their, say, a Stripe or a Razorpay or one of the payment gateways. Right? So think of us as a payment gateway, but for insurance distribution. So anybody who wants to distribute insurance, we are a one-stop shop. There are insurance in a box which constitutes three fundamental building blocks. One is the insurance product itself. So we connect with about 40 or 54 insurance companies in India via APIs. So every insurance product is made available to you via an API. Second is there is the technology platform that is required to manage insurance business for the distributor, right? So a distributor could be a bank or a broker, or it could be like any fintech startup, anyone who wants to distribute insurance. Examples would be like say Ola. examples would be like industry bank, and everything in between. Anybody who wants to distribute insurance to their end customers, we are a one-stop shop. And the third component of our platform is the compliance license. So some of our partners, distribution partners, tend to want to distribute certain kind of products that require by IRD or from the regulator perspective an intermediate license. But they don't want to go through the hassle of acquiring a license and sort of all the nuances that that come along with the compliance side. For them, they can sort of ride on the back of ours and fulfill the compliance requirements as well. But from a perspective that if they use our technology, by definition they're compliant because we build all the regulatory heavy sort of nuances back to the technology. So if our partners are using our technology and they would be, whether they would be partners on the platform, they are compliant. Right? So it is an insurance in a box to any business to distribute insurance. That's a little about us. As far as the history, actually this space, we started about 4 years ago or so, and the first year was all trying to figure out what we wanted to build. We were 4 co-founders, so slightly heavy on the co-founding team, and 2 of us came from the insurance industry and 2 of us came outside of it. And it was basically sort of what we were passionate about was really to bring technology and data and infuse that across the value chain, right? So we didn't know where to start. So what we did was we said, hey, look at the 4 of us. We all come from various backgrounds. Some of us are slightly millennialish. Some of us are much older. We are not exactly your asset-light folks. We have our own sort of homes and vehicles and all of that. And why isn't there an insurance brand that speaks to us, right, as a upwardly mobile business owner? And we're part owners of this business called Riskcovry now, right? So why isn't there an insurance brand that speaks to us? There are a lot of insurance brands that speaks to consumers in general, but why isn't there one that speaks uniquely to an upwardly mobile business owner segment? So we started off building that platform, and for 2 products that typically where risk characteristics differ by the asset itself, like home and business. No 2 homes risks are alike. No 2 businesses risks are alike. So we found that they were mostly cookie cutter kind of solutions, insurance products that were sold to them. And what we said was, okay, let's build like a policy bazaar for home and business insurance, right? And then we went through that entire journey. It had sort of it was really appreciated by the market. Everybody went there to discover the unique risks for their own home and their own business. About 6 months into it, like close to 15,000 web sessions and all of that, and all the grand total of about 18 policies sold, right? So that's when we realized that this market is push, and we require that last mile service either via the phone or sort of figure out street. And to build and scale that particular model was not something that that was not a passion space for us. So we kind of pivoted at that point in time. But what we realized in that pivot was that we had built API-based infra into multiple about 5 different insurance companies, 5 for home, 5 for sort of business insurance. And then we realized that this is such a pain. It is such a huge pain to kind of build this. We had taken close to a year to launch a single product, right? And we said, okay, we have built this. We have built everything on an API first principles. Why don't we figure out why we don't want to become a brand? Because becoming a brand like a policy bazaar means that operational nuances come in which you have to build for and scale for, which is not something that we're excited about. How do we kind of leverage what we have built and instead of becoming a brand, be the force behind any brand, right? So like insurance by definition, we had one worldview that we all shared was that we thought that insurance is super underpenetrated, and for it to really move the needle from a penetration perspective, we had to almost come from a worldview that insurance needs to be ubiquitous or insurance needs to be democratized. So how do we do that, right? With what we have built. So we went down the the rabbit hole to kind of figure out product market fit and all of that, to figure out which partner segment, which sort of pricing strategy, which kind of product, which partner, on which channel, etc., etc. And over a period of time is what we've been able to accomplish is on the back of really learnings from the market of what the market was telling us in terms of which insurance product to which channel at what price point from which insurer, etc., etc., etc. And then the aha moment really was when sort of we said that, hey, there's a lot of inbound, especially on the back of the pandemic. So the pandemic really accelerated our growth because insurance was on the top of mind, for a lot of folks, right? So health insurance in general, life insurance particularly. And we saw a lot of inbound from various kind of corners and say that, hey, why don't we productize this, right? So why don't we kind of take this and say that, hey, we have, by way of integrating with us with a one single unified API kit, you can work with 40 insurers, 85 different products that are written on the platform right now, and you can pretty much go live in a matter of a few days. Something that takes about 2 months to launch or 3 months to launch a single product now, maybe even more. In certain cases, if it is a very heavy underwritten product, it takes a long time to launch. It's a nightmare, right? Because there's no API standardization across the insurance world, right? There is lack of documentation. There is formats are different. They keep breaking because regulations keep changing. Core systems are not the same. That means the way the APIs are not the same. So there's a lot of challenges, and nobody wants to do that. So why don't we kind of build a product that helps people to distribute insurance in the most simplest, easiest possible? So the product vision is almost like what would a Stripe for insurance look like, right? So that is the journey that we are on, and we are happy to say that right now we have post our Series A last year. We've built tech to power that our tech that we've built so far can power about 70-75% of insurance distribution base in India. On the back of which we have kind of accelerated our journey to enter another market. We just launched in the UAE, and just finished as the sales history. So a lot of learnings along the way, a lot of mistakes made, and we continue to make those mistakes. We continue to make new mistakes, not the same mistakes. That's all I can say. It's been a great journey, and I don't think insurtech infrastructure really existed. So for us to kind of come in and see the space early and take it to where it is, it's been a rewarding experience so far.
Definitely. So I do have a few questions for you, but I'll come back to you at a later stage.
I'm sorry for taking long.
No.
4 years time to kind of compress that in 5 minutes.
No, definitely. Over to you, sir. So quickly, just wanted to understand from you. So you have been working, like you have built decimals from scratch since over almost past decade. And you have been one of the leading LMSs of Saarathi from a Saarathi point of view. So wanted to understand from you, how have you built Decimal as a brand as of now? You are very well known in the market and very well integrated. So from that point of view also, how have you built to scale that kind of a B2B model, which is normally considered slightly difficult to scale from a number of customers point of view?
Also, just to add on that point, maybe you have been into decimal technologies for past 10 years, which is a bootstrap company, and you're now moving on to Saarathi as a new kind of startup where you're trying to raise funds and all. So how has that journey been? How was the bootstrap journey? How did you manage for 10 years inside the company?
Sure. Hi, good afternoon everyone. I'm Arvind, Nhata. So Chiranth had a 4-year story, I have a 12-year story. So we started out in 2009. A few of us who had passed out from our MBA and then Naukri nahi karni. So we are a little old generation entrepreneurs, if we call us so. We really didn't know what we were doing with Naukri nahi karni, that we were clear about. So in 2009, mobile was used primarily for only personal use. I mean, business use of mobile was very little. So there we got the idea, we put mobile to use for business. So we were one of the early ones to start building solutions for, and then some of our batchmates gave us the first few opportunities. So we started working with Max Life Insurance and ITC. So we had batchmates there who were kind to give us some application requirements. Those are mobile application requirements. The next turnaround for us came in about 2014-15 when ING Bank, which was a customer of ours, was acquired by Kotak Bank. And then Kotak Bank was looking at doing the tab banking. So I mean, slightly exaggerated, but I keep saying this, that Kotak called us and said, oh, Amitabh Bachchan ki ad thi ICICI Bank ki, I don't know, the slightly older ones who know it. where he was flying a kite and ICICI Bank says someone comes to his place and clicks pictures. So we were shown kind of that and said, "Isse acha kuch bana." And we ended up making Kota Gate 1. It was a 2-year journey, but we built Kota Gate 1 along with the bank. So that was our claim to fame for a very long time. I mean, before that, anywhere I would go for a meeting, I would say we are IAMAI pass outs and somehow get a meeting. I remember attending a meeting, a session by RBL Bank in Bombay, where RBL had invited us, and I was standing with one of their innovation heads. And there was somebody from ICICI, HDFC and Axis standing there, and I started pitching about decimal, and he said, "Arey, 811 wale." So our identity changed.
And this was, sorry, just from the technology perspective or the ideation of the product as well?
Ideation of the product as well. So we were part of that. When we started with tab banking, we built, Kotak bought about 800 first tabs. We went back to the drawing board. We said, "Yes, so sahi nahi hai, tab should be a passe. Why do tabs?" And then we convinced the bank to use mobile phones. And वो कहते हैं जब आप when you are thinking right, कायनात की साजिश, so Aadhaar happened. Aadhaar पे फिर they allowed opening accounts. It was not known. We were just progressing as we were going. But that was a fabulous journey. We were beaten to death because we were the smallest in the room, and systems आज भी नहीं चलते, तब भी नहीं चलते. So somehow we managed to sail through it. All I keep saying is कि restaurant चला, kitchen में तो आग लगी. But yeah, we opened almost about 35,000 accounts per day on the platform until it was stopped by Aadhaar for some time and all that. Moving forward, we got opportunities to work with NBFCs. We built a few digital LOSs. So one of them was building alongside of McKinsey for Aditya Birla, where we learned a lot. For us, it's been a journey सीखते गए बना because we've been bootstrapped. We never knew how to raise. Even today we don't know how to raise capital honestly. There are people who are coming on board and helping us now, but as entrepreneurs, I don't still call myself someone who knows how to raise capital. So hence we had to run a bootstrap company, let's put it that way. We had to be profitable all this while. So we started building loan origination systems, digital loan origination systems for NBFCs and banks, helping them kind of stand against the fintechs which were happening. So we built it for Aditya Birla, we built it for Ugrow Capital, we built it for a few small finance banks, etc. That is when an interesting thing happened that some of the large DSAs approached us. DSAs are direct selling agents or the third parties of these lenders who approached us saying that आपने एक बैंक के लिए solve कर दिया मेरे को बाकी banks के लिए भी solve कर दो. So he said, for us everybody was an enterprise customer. We took them up, बड़ा सा एक proposal बनाया. तब तक हम कुछ crore rupees का proposal बनाने लग गए थे. So we built a large proposal and we gave it to the DSAs. They would stop picking our phones after that. So when 3 such happened, we said, "Yeah, we आए तो बहुत excited थे, but why have they vanished away?" So we digged inside and figured that DSA works in a very different model. They work in a OPEX model. Everything is success led. Right? So we said, and we were in the capex kind of. किसी कोई भी बैंक के पास आप SaaS लेके जाओ आज फिर भी सुनते हैं, they were like, जो पैसा चाहिए अभी मांग लो, right? So don't ask for money later, because they have a lot of money sitting on their balance sheets.
They don't like revenue sharing.
They just, I think that's Indian mentality. No one likes the other person making money. वो किसी को पसंद नहीं है, मुझे भी नहीं है, so I'm part of it. So what we figured is कि DSAs or the third parties, or rather we step back and said कि हम जितना भी whatever origination systems that we are building are being used in 2 manners mainly. First and foremost, the lowest hanging is DIY, do it yourself customers. So customers like you and me, जिसको बैंक और NBFC was not able to reach, creating a digital property and helping them come on board. The second was doing the assisted model for their sales teams. There is a large pie, which is the third party channel, which is the DSA, जिसको कोई digitize नहीं कर रहा है या बहुत टुकड़ों में हो रहा है. So we said, boss, and then we did some market study, and we figured that DSAs are 70% contributors to the origination of lending. अलग-अलग products में vary करता है, but it is about 70% of lending originates from DSAs.
It might not convert, but origination is.
No, conversion का part बताओ. Conversion का 70% comes from DSAs.
छोटे टाउन में आप चल जाओ, everybody will like everybody is an individual agent. मैं आपका लोन करवा दूंगा, मैं आपका लोन करवा दूंगा.
उसमें variety है. There are BSAs, there are dealers, there are connectors. उनको अलग-अलग percentage commission मिलता है. But origination happens from them. Now when we dig further, we figured कि उसका digitization कोई क्यों नहीं कर रहा है. And we've been on this side and digitizing anyway. So बना रहे हैं तो उनको क्यों नहीं दे. So what we found is कि DSA और lender के बीच में there's a lot of mistrust. शायद 10% लोग ही करते हैं, but everybody से DSA आया तो छोड़. And that's an Indian mentality. Again, so हमने बोला कि यार यहाँ पे trust कैसे लाया जाए. That was one thing, and cred was working around trust. और उसमें अच्छा बस हमको भी मिला कि trust build करना है DSA के लिए. And then we went further to figure out कि जैसे हमने यूग्रो कैपिटल के लिए बनाया था. यूग्रो कैपिटल gave it to the DSA. But if every lender starts making one such application and gives to the DSA, तो DSA के बाद एक अलग कहानी होगी. उसके बाद 20 एप्लीकेशन, 50 एप्लीकेशन होगी जिसके अंदर he'll have to put the file. Today he has paper forms, but paper forms have not changed for decades. Right? But digital तो, I mean, we change every 10 minutes. Right? So the DSA will have a different. And I've been an FMCG guy for some time. यहाँ पे हम जो डीलर मैनेजमेंट सिस्टम जिस पे पार्ले, ब्रिटानिया अपना ऑर्डर लिखते हैं, दो सिस्टम अडॉप्शन वाज वेरी डिफिकल्ट. तो वो ऑर्डर उसमें लिखने के लिए उसको एक पूरा सिस्टम बनाना पड़ता था. दे हैव टू पुट अ गाय टू डू दैट. हाँ, इट्स अ बिग चेंज. So he said we'll have to get a third party to come in between and become one interface for the DSA. And उसके बाद में, so once the DSA is logged in the file, उसके बाद में कोटक को उसका वाला रेड, ICICI को उसका वाला ऑरेंज, HDFC को उसका वाला ब्लू can be done by the platform. So that's where the idea of Saarathi came to us. So we incubated it as part of Decimal in November 2019. We went to market in July 2021. Pandemic had its little bit toll on us, and we invested everything from our side. तो सारा जितना कमाया था सालों में वो सारा डाल दिया, डेट लेके डाल दिया. We brought it to a good scale. In April 22, we actually hived it off as a separate entity now, and in some time now we should get our first. मेरे को नाम नहीं पता है pre-series, but some money that we will end up raising soon, which will help us now run this forward. So in terms of numbers, the first 6 months from July 21 till January 22, we were only present in Delhi NCR, and we covered that market. We became almost the 4th largest DSA channel there, and then we started expanding pan India. Today we are present in about 6 cities. Last month, which closed day before yesterday, we did about 250 crores worth of disbursement through the platform. Primarily home loan and LAP is what we took up first, because where the ticket sizes are larger, we are able to talk bigger numbers which are impressive. But the real game will be when we do unsecured, because the digitization on unsecured is more, the TAT can be faster.
But isn't this a big behavioral change? We can talk later once it's covered, but you know, a lot of these agents are, first of all, they used to do paper and now they do WhatsApp, right? For at least from us, we've found that it's very difficult for them to kind of, it's a big behavioral change. उसको बोलो कि system के सामने बैठ के ये data enter करके, you know, even though the value is there for him, but he finds it or she finds it.
It is so बहुत मुश्किल है. I mean, forget behavior change from that. Trust ही नहीं है. पहले तो बोलते भाई तू मेरी फाइल लेके भाग जाएगा. So it starts from there. To see, we've learned this कि अगर आप How were we able to convince Kotak Bank to not go on tabs? And I think we saved them crores and millions of dollars or whatever you call it in both capex and opex. Because we said कि टैब को वो बहुत सौतेला बिहेवियर देता है, वो बोलता है ये टैब चलता नहीं है, ये चार्ज नहीं है, राइट? सो बट मोबाइल फोन पे उसके आप कुछ भी डाल दो 5 मिनट में उस एप्लीकेशन का राजा होता है और उसका फोन पे भी डिस्चार्ज नहीं होता है. So that is how we convince Kotak Bank कि आप फोन पे जाओ तो their risk compliance, that is my headache. I will ensure that आपका डेटा कोई हाथ नहीं लगा सकता. So that's how in 2016ish we went BYOD with Kotak Bank, and since then Kotak has not invested in a single tab. So here also if you make an application which is easy, minimum data में वो डाल सके, उतना मुश्किल नहीं है उसका behavior करवाना. What we are trying to do is we do a lot of focus group discussions with the DSAs to understand कि आपकी problems कहाँ पे हैं. And what we figured out 3 problems that they have been talking about. First is over here मैं file डाल तो देता हूँ, हफ्ता 10 दिन 15 दिन it takes for the credit guy to actually look at it. Can you make it faster for us? So there we are trying to integrate with the banks. The Kotak Bank is one which has come on board, and today we route about 40% of our traffic to Kotak. And being on this side, we realize how broken this is. I mean, whatever Chiranth is talking, it's still much better. API है तो सही, standardization नहीं है. यहाँ तो API ही नहीं. ये कोई खोलने तैयार नहीं. Kotak तो because we've been working for so long, I was able to go up and down and get that done. So first was the file reaching was the problem that they stated. Second was they don't have visibility into file का हुआ क्या. The status of the file. And third was कि payout नहीं आता है हमारा. Disburse हो गया तो their commission or their payout. So we are trying to solve their problems. So we are integrating to send it faster. We have put our ops team which keeps calling the customer, the bank, and saying कि सर ये file का data बताओ, and we punch it into, because API तो है नहीं reverse. So we keep punching so that the DSA gets to see it on the mobile. And we are working on the payouts. So we are trying to solve his problem so that he goes out and sells more and does not keep sitting down and calling the lender. And the other thing we are trying to do is give him a lot of possibilities of managing his business digitally. So we are giving them dashboards, we are giving them visibility to where their guys are, कौन सी file कहाँ है. We are helping them do marketing. The moment he comes on board, in 1 or 2 clicks, he gets his website up and running. So those kind of things which will get the stickiness. We're trying to work outside of just lending for him, but help him actually.
So आपकी storytelling skill देखकर लगता है कि मैं fundraising right.
सच्चाई.
So we have Nishchay with us. He's the founder of Jar. Mr. Very interestingly, I think 4 years, 12 years, and he's just 1-year-old company which has managed to scale quite a lot. If I'm not wrong, you have about 8 million downloads, right? Yeah. Awesome. So 8 million downloads in 1 year is a very interesting story. Would love to hear about how your journey has been. When did you start? What was that aha moment? Especially in B2C, where CAC is an obvious hiccup for most of the startups. So over to you.
I can relate to a lot of things these guys said. I come from a small town. I did my regular engineering. Mom and dad were running a small store, regular mom and pop store, stationery store. I used to sit in the store all the time. I somehow escaped, to be very honest. I landed in Bangalore. No aspirations related to job or entrepreneurship. Never thought that I would start a company. Never thought that I would raise money and all those things. Got into job, got freedom for the first time in life. Started enjoying it. Within 1 year, I got the opportunity to fly out. I was in US for a very long time. I was working for Untitled Aerospace then. Then came back to India, joined Accenture again, started traveling a lot. But my childhood friends, they started a company called Wicked Ride, which was a premium and luxury motorcycle rental company. Idea was to bridge the gap between aspiration and affordability. They were renting out Harley Davidsons, Ducatis, Triumphs, Royal Enfields, and all those kind of bikes. They're still running the business on their Facebook page and they're killing it. They're doing crazy business. And we got off at a coffee and they're like, we are going through all these challenges and day-to-day operations. Like I was talking to them about all the great systems about around automating the entire operations. They dragged me out of my job and asking me to help them build the tech. And that's how I got into startup world. And it was not a startup. It was, for us, it was a pure play business. And for us, it was like, how do I make money so that we can gutcher it? And it was never about startup and all of those things. And all the terminologies used in the startup world, product manager, cohort, retention, all those things, it was all over the head for us. We used to wash the bikes, we used to deliver the bikes, we have distributed flyers in the signals, we have done everything. And weekends, we used to sit in the store, deliver the vehicles. We had like 8 stores across Bangalore, and we were scaling it, we were delivering the vehicles. There was one guy from Flipkart who had booked one of our vehicles, and I was talking to him. We used to sit and ask these questions: how did you discover us? What did you like? What challenges you had? And all of those. And he spent good almost 1 hour talking to me, and finally he asked me, "Are you guys hiring product managers?" I said, "Not yet, but give me your number. We'll call you back." And after he left, I opened my phone like, "What is product manager?" And that was because it was for us. There was not like all those things. And finally, there was a lot of inbound from the investor community because we pivoted the business to mobility. Because as and when we became more popular, more people started coming and asking, "I don't want big motorcycles. I'm in Bangalore for a day. I just need one scooter to go around." So we figured out mobility is a much bigger problem. So we pivoted the entire business towards mobility. We were scaling it and we were growing really good. And then VCs came in. At that point of time also when VCs came in, they were asking, "What is your corporate, what is your churn rate?" We had never heard these terms, and we asked, and we are absolutely shameless. We said, "Sorry, you have to explain me what you mean by that." And he was kind enough to explain what does a churn mean. I said, "Forget all of those things, we don't know. I will show you something." We had built dashboards as a regular IT guy. And for us, data was, and plus as a Danda, we wanted to know the numbers. So we had built all sorts of dashboard ourselves. We did not know anything about Clever Tab or any of those things. We had built everything. So, we were working 19, 20 hours and we were building all these things and we had the numbers. Like in a day, if there are 1,000 bookings, how many bookings came from new users, how many came from old users, how old is the user, what is the average age, what is the number of bookings they usually do, how often should I nudge in. We had figured out these things from a pure business standpoint, but we never knew about the business terminologies and all of those things. Then we were able to raise good money. We raised over $200 million in less than 18 months. We launched the brand bonds, which you can see all over Bangalore at a point of time. Cash flows. These people earned all their life, yet had no meaningful savings. These guys had no access to credit. These guys had no insurance. And these are regular people. I'm not even talking about the lower strata. All of these guys. I'm talking about regular. Shopkeeper will make easily 40,000 to 50,000 per month. And yet these guys also had no access to credit and all of these guys. And that was, I could see the irony. We were making really good money by selling these services. At the same time, the people who could afford it, who needed it, were not buying it. Something was broken in the whole system. Pure play, 30,000 feet approach, there were billion people with bank accounts in India, with only 25-30 million people who have ever invested in stock, mutual fund, index fund, any of it. Only 30 million people have a credit card, of which only 25 million are active, with average 3 cards per person at 75 million cards. And there is only 20 million people who have bought insurance digitally themselves. And that too, that number is high because all the Ola checkbox, all your make my trip checkbox, that pushed the number. Actually, people going and buying insurance themselves is probably 4 or 5 million. So 50-60 lakh people have bought insurance digitally themselves till date. Be it health, vehicle, property insurance, that's all. So we figure out market is big, distribution is broken. We try to do a lot of research on why the whole thing is completely broken. Back in October, November, December of 2020, I used to go to all these restaurants where people grab their breakfast, teas, coffee. I used to dress up all in formals with a padded pen. I used to go and lie. Me and my co-founder used to go and tell them, "Hey, we lost our job because of COVID. We work for this institute. If you answer these 6 questions, we get 10 rupees from the institute." And people out of empathy, they were answering those questions. We were asking them, "When did you start earning? When did you start saving? Why did you start saving? Who got you into savings? If you're not saving, what are you doing with all the money? And when do you think you will start? What is that you're waiting for? And what do you do when you run out of cash? Like, how do you manage the cash flow for, say, 20th of the month? you run out of cash, how do you manage cash flow for 10 days? It kind of gave us a lot of insights, and I relived my 20s in those guys' answers. I was that typical guy who had a lot of aspirations, come from small town, started earning, didn't know what to do with the money, and by 20th I was broke every month without fail. And last 10 days I was always on credit cards. Beginning of the month, I was not eating at McD. End of the month, I used to eat at McD because only McD could accept credit cards for breakfast and lunch. So it gives a lot of insights about how middle class India treats money, how they earn it, how they spend it, how they categorize it, and that kind of gives us a lot of insights about why they do not invest, why they do not have a credit options, why they do not have an insurance at all. We figured out that the existing systems are broken, they're very pretentious, very intimidating, everything is in English, and it's not welcoming at any level. And options are so many. There are 5,000 mutual funds. Which one? Mutual funds, sahi hai, pata hai, like, which one? What do you mean by ETF? Like exchange traded fund, all three terms which I don't use in my life. Now you have put it together and you are asking me to put my hard-earned money into that. They are not comfortable at any level. So we figured out that we had to simplify this. We had to bring down the cost of participation. We have to remove the burden of knowledge. We have to remove the burden of capital. We have to remove the burden of indecisiveness. इतना मोटा insurance copy दिया तो sign करने के लिए घर जाके करूँगा. No one will sign it in front of you, in front of the agent. They want to go. They have to call 5 friends. Ask if तेरे पास क्या है, ले क्या, अच्छा है क्या, all of this. So we figured out you have to remove the indecisiveness, remove the cognitive load, make it simple. Only then they'll start doing it themselves. And that's how we started building. With great insights, we simplified the language. For example, in a typical fintech platform, you'll have a section called portfolio where you go and check how much you have invested, right? Common man doesn't have a portfolio. उसके पास diversified asset class नहीं होता है. उसके पास locker होता है, तिजोरी होता है, तिजोरी में पैसा होता है. So it's like we called it locker in our app. Instead of saying we worked a lot on simplifying and demystifying finance for our consumers, because of which we launched the product 1 year back. As you said, we have about 8 million downloads, but numbers wise we are growing. We're the fastest growing fintech in the country right now.
Alright, I mean that is a very interesting journey per se. What I really want to understand is
I have a question.
Yeah, please.
What was your unique insight into picking gold as one of your alternative instruments?
Familiar with asset class. People are lazy, people are lethargic. They don't want to learn. They don't want to process. They don't accept new information so easily. So when you are, say simple, for example, say someone doesn't know calculus and doesn't know English also. You can't teach him calculus in English. First you need to teach him English and then calculus. When it comes to savings and investments, first you have to teach habit, behavior and discipline, which is lacking. When you are teaching them those three, you can't introduce one more variable which is completely unknown to him, which is asset class. So bring the asset class which is the most familiar, and that's why I bring it.
Fair. Really, so what I wanted to understand from you, right? You in the past 1 year, like when you actually scaled up to 8 million users, I mean 8 million downloads is not a joke, right? A lot of B2C company try dying to even get that 1 million. So what I want to understand is how did you go about with the GTM? Like what was any specific strategy? How did you kind of appeal to the consumers to download it? Was there any specific tricks or strategies that you used that normally is essentially standing out from the the run of the mill digital marketing and all of that? Like was there something specific or that you did that worked out for you?
So just to add on that, I'm very curious on how much did the IPL campaign help you in the subscribers?
IPL is just last 2 months.
Yeah.
We did not add 5 million. They're growing at a very significant pace month over month. Content is the key answer for us because we figured out that the existing financial platforms, I don't want to even take the name, you can go and check, search on YouTube their ads. You will see a 37-year-old bald guy sitting and telling, I'm a late bloomer, I started investing very soon, very late, I had some extra cash on me, I was about to deploy money there, since prevailed, I invested here, I want to retire. You can't entice a 20-year-old guy with these stories. You will see an insurance company, a 40-year-old guy jumping into water carelessly because now insurance है family को अगर मुझे कुछ हो गया तो family को देख लेगा insurance. You can't entice a 20-year-old guy these things. So we came up with a really unique product. Yes, my marketing team, my content team is larger than my engineering team. And my content team is very young. They're around 22, 23, 19, 20-year-old guys who are still not, thanks to all financial companies, they don't target these guys. So these guys have not seen those ads or anything. Those minds are still not covered. They're very fresh.
Right.
And they take a very fresh approach. And we have literally set up a factory of creators who do content for our digital marketing campaigns. We refresh our library of 100 plus creatives every week on our channels. So our content is always fresh, always relevant, and it's authentic. The platform can be in English. We made it as simple as possible. We serve service in 4 languages of Ajinkya, other than English we serve 4 more languages. But content has been the key reason for simplification of the entire product, where they don't have to take too many decisions. Simplify. Everyone doesn't need 15% returns on their investments. Common man needs to preserve his earnings and generate 6-7% or 8% yield, which will be inflation. That's more than fair. And try to optimize for that.
But how, I understand where you're coming from in terms of if you only know about then how is asset class even relevant for them? I'm just wondering if I mean, this is the best that they can get, or that obviously is not the most optimal way. It might not be, given their circumstances, the most optimal way of investing. This how is it different from people buying gold or real estate, which we as Indians have always been doing, barring the fact that obviously there's some making charges of 20-25% that you'll end up spending if you buy a gold chain. How is this different to that?
Fractionalization, accessibility, simplification of the entire process, those are the key winners. And our emphasis is on savings, not on the instrument. Choose an instrument is good, which is familiar, that's all. Our messaging is always around savings.
Right.
So we are building currently. We will slowly help users to diversify the asset class. Once he gets comfortable about setting aside some money every day, it becomes very easy for me to cross-sell one more financial service.
Talking about the channels that actually gave you the most visibility, what was the channel for you that worked out the most?
For us, in-app referral engines, content, engaging tons of micro-influencers. We are not talking about big influencers like Nhata or BB Vines or someone who has 20 million. We have to, because those guys, if you are that, those guys will bring you a spike, but they can't bring you sustained, and you can't keep that spends consistent. These are very nice per video. We figure out with that, and they have their own pockets and their age group that you can reach. So we figured out that you have to have a razor sharp focus, and we have to know the entire demography into multiple groups, and we need to identify the right micro influencer for each pocket. Who has only 3, 4, 5,000 followers, that's all. When someone is having just 3, 4, 5,000 followers, the trust levels are different. Yeah. It's very high.
Definitely.
And their connect is much genuine or still very early and authentic. So we tapped into those micro influencers. I ran campaigns on LinkedIn telling that marketing internship opportunity for tier 2 folks only. For tier 1, don't even reach out to me. And I got 8,000 interns signing up for it. I asked each one of them to create WhatsApp groups within their cities and all. That brought in ton of people. So we kept hacking into the entire user groups at the low cost. Our CACs are like 1/10, 1/20, 1/100th of a typical fintech company.
Really? So I think this is probably one of the first, or probably to my knowledge, one of the only success stories that has prevailed on micro influencers and building a B2B base using micro influencers like heavily, right? I mean, everything else I've heard is purely digital marketing power. Like you pump in money, you get that, but the tax are extremely high. 2,000, 3,000 per customer is what they end up paying.
No, we also do it, digital marketing. At the end of the day, it's a push product, it's not a pull product.
No, definitely.
Fooling myself if I think product में ऐसा growth engine डालूंगा कि लोग आते रहेंगे, no it won't. It's a push product. Again, we did something different. My entire growth team comes from social media background.
Okay.
The entire growth team are ex Microsoft, ex Share Chat kind of companies. And these guys are built distribution of 20%, 25% for these companies.
Okay.
These guys really know how middle income is. These guys really know how to tap into these pockets and how to build mesh networks, how to seed a node and convert that node into a cluster. These guys are very good at it.
Understood. Understood. Thank you so much. Sir, over to you. So we heard your story of over a decade on how you built Decimal and then how you are now building Saarathi. One thing that really stands out to me in your journey is the fact that you are completely bootstrapped till now. Like, as of now, the culture that is prevailing is VC ka paisa out, how cash burn karo, bring in users, like again, keep on going. Okay, that's a different business model altogether. But looking at the current economic scenario, I think many startups, if they want to survive, what seems like a logical way is to try to at least become bootstrapped as much as possible. Like as much percentage of your cash burn that you can bootstrap internally is what will help them survive, like if possible. So, from your scenario, how did you what was the thought process when you were completely bootstrapping, and how did you essentially manage to bootstrap it for the entire period? Like वो टाइम पे स्टार्टअप के हिसाब से आप बना रहे थे, धंधा बनाना था वो हिसाब से आप बना रहे थे?
I think you are answering it. तो धंधा ही बना रहे थे. We were never thinking of valuation. We didn't know how to.
Okay.
To be very honest, ignorance था. We didn't know, and we were there to just. In fact, I can tell you stories like पहला जब हमने अपना offsite किया था, the three of us founding team.
Right.
तो हमने कई जगह हम we started our office because Gurgaon was very expensive for us. So हमने चंडीगढ़ में office start करी थी, and we went to I don't know some location in north for our offsite.
Okay.
तो रास्ते में कई ढाबों पे अपनी फोटो खींची कि यार कभी 10 साल बाद अपने भी नाम पे भी कोई किताब लिखेगा तो उसमें फोटो लगाएंगे. Those were the I mean we came from a very different place. And we were just building a business for the fun of it. ये तो बाद में all these things started happening where mobile became a very important instrument or a device for all of us. Where Fintech as a term came out. Like we've seen this whole journey. I'm probably much older now. तो हमें वो पहले तो GPRS होता था. हमारे एप्लीकेशंस बैकएंड में SMS पे कम्युनिकेट करते थे. There was no GPRS तब तक. तो हम SMS पे भेजते थे, SMS वापस आता था. SMS को हम कन्वर्ट करके फिर एप्लीकेशन में दिखाते थे. So those eras to then GPRS, then 2G, 3G. So मतलब बहुत पापड़ मिले and then kind of got to where we have. So yeah, I mean bootstrap was not by choice. It was just something that we were doing.
It was an intrinsic factor that came.
Probably just us.
Got it. But sorry, you have a question? Yeah, sure. So if you were to essentially, give a few words of wisdom to the current entrepreneurs who are, let's say, preparing for the upcoming economic downturn, and on how to essentially think from a bootstrapping perspective and how to build according to that. जो existing cash burn कर रहे हो, like from a VC money point of view. So how to essentially extend the runway and how to keep it in such a way कि यार अगले 2-3 साल वो profit या खुद के revenue पे निकाल पाए. So what would you like advise?
Again, I don't know the answer to that. What I know is how we are trying to look at it. So we are saying cut it to size, run it very very tight because we've been talking to a few investors of late, and ये जो सब बात हो रही है वो सच्चाई है. That is all I can tell you. कि 2 महीने पहले जो बात हो रही थी और आज हो रही है. Now whether it's a cascading, कोई पहले डरा और उसने किसी को डराया और उसने किसी को डराया और फाइनली हमको डरा रहे हैं, वो मेरे को नहीं पता. But net ये है कि 2 महीने पहले जो बात हो रही थी और आज में there is a lot of difference in the conversations which are happening. There is winter, summer, जो भी आप नाम दे दो, पर कुछ तो चक्कर है. Sentiment is, क्योंकि एक साइड में बोलते पैसा बहुत है, दूसरे साइड में बोल रहे हैं कि देने तैयार नहीं. I've heard of stories जहाँ पे शायद शेयर होल्डर एग्रीमेंट साइन हो गया और पैसा नहीं है. It's gone to those levels also. So coming back, I would say कि very hard to do it that way क्योंकि आदत पड़ी हुई है पैसा बहुत करने की, growth की. Growth is what is being valued. It's very counterintuitive. Right? So growth की आदत पड़ी है कि पैसा खर्च करके ही growth आता है. Right? So अगर पैसा नहीं है खर्च करने को तो growth कहाँ से आएगा? Growth नहीं आएगा तो पैसा कहाँ से आएगा? So it's a tricky situation. But I don't think it will last for too long. That's my personal belief. क्योंकि पैसा बहुत है. In fact, not naming, but I remember meeting an very successful NBFC CEO, and वो listed है और उनका stock price बढ़े ही जा रहा है. तो मैं उनसे काफी regularly मिलता हूँ, तो I asked him, सर रोज क्या करते हो आपके stock price बढ़ता जा रहा है? I'm sure कुछ तो आप या तो कस्टमर ज्यादा ला रहे हो, क्या कर रहे हो सर? तो कुछ नहीं करता यार, मैं तो धंधा ही चला रहा हूँ. वो एक एनालिस्ट आके बात करता है, मुझे पता है फिर 100 रुपये बढ़ जाता है. तो मैंने एनालिस्ट से बात करना बंद कर दिया. So these are sentimental. Real business में नीचे क्या हो रहा है, that's very different. So yeah, I would just say कि get the basics right, continue running it, and this will pass.
But don't you think कि हमेशा ऐसा ही होना चाहिए, right? Fundamentally, I think whenever there is, a boom market, whenever सारी गलतियाँ तभी होती है जब बहुत ज़्यादा पैसा होता है, right? And whenever there was a lot of money in the industry, people were just, as you said, burning right, left, and center. Nobody was really caring about कि यार मेरा fundamental bottom line कैसा दिखता है. The more money I get, the more I'll burn, the more my valuation will go up, the more I can pick up more money. And suddenly somebody saying, now people are saying, nahi, but growth can't be at all costs. Growth has to be sustainable. Surprise, मतलब धंधा जैसे करना है वो तो initially, fundamentally that's how it should be, right? And I mean, and you can also see the RBI coming down on a lot of these things because it has been fueled by external money where right, left and center कोई भी loophole मिल गया उस पे एक business बना दिया and let's go raise some money because anyways there's no more to come. So it's kind of I think if you look draw parallels to an economic cycle ऐसा ही चलेगा. अगर $1 trillion economy में आएगा तो कहीं ना कहीं तो जाएगा. इंडिया में भी थोड़ा आएगा and people were going to pick up money, but suddenly every VC is talking about profitability and path to profitability and suddenly. But आप 6 महीने के बाद हो सकता है कि मार्केट अपने आप करेक्ट करे और दोबारा पैसा आने लग जाए. So I mean obviously given that you've been on both sides, right? आपने धंधा चलाया है 10 साल बिना उसके, I'm sure you guys made good money and now you're trying to kind of go down the VC route. I mean I don't know if I'm asking something or saying something, but it's quite ironical, right? कि ये बातें अब हो रही है, हमेशा से ऐसी बातें होनी चाहिए, right?
हमेशा सच्चाई होनी चाहिए थी, हमेशा तो ऐसा होता नहीं है. So I think, but I actually feel good about this कि इतना पैसा जब लग रहा था तो इतनी ट्रायल्स हुए. नहीं तो नहीं होते.
That's fair.
It's a part of the cycle. So it's a part of the cycle.
So I don't think there's कोई, I am no one to or we are no one to say yes सही है गलत है. पैसा अगले का लगा रहा है तो who are we to say मत लगाओ. And उसमें से कुछ अच्छे businesses बने भी हैं. Sure. So I would, or as you are rightly saying, because I remember once being in Jaipur और वहाँ पे वो Uber का या Ola का ड्राइवर था. तो वो बोले कि सर जब Uber इंसेंटिव बांट रहा था तब हमने गाड़ियाँ फ्री कर ली. मतलब मैं 13 मोबाइल लेके बाइक पे घूमता था. एक जगह से बुक किया, दूसरी जगह जाके उसको खत्म किया, बाइक पे घूम रहा हूँ. क्योंकि शाम तक मैं अगर 15 राइड कर दी तो 2000 रुपये मिलते हैं। तो मेरी ईटीओस फ्री हो गई, किसी की ईटी का फ्री हो गई, तो पैसा सही जगह भी पहुंचा है। So I would say there's nothing wrong about it. Cycles है and you just keep doing it.
Just to add on to that point, in terms of VC funding coming in, and I think, and this is my very personal opinion, that we're looking at it probably wrongly. Saying that, okay, fine, the money is coming in for experimenting, and VCs were not bothered about profitability. You look at it, I mean, I don't think any sound businessman would ever say that I'm not bothered about profitability. The question was, and this was, and again, my personal opinion, was to try and circumvent the MRTP Act, Monopolistic Restrictive Trade Practices Act. So in order to circumvent that, create yourself, acquire so many consumers that you have created such a scale that you're creating an entry barrier for anybody else who's going to come in. And I think that is what the game was all about. People have been talking about it, saying that, oh no, it is all about burning money. I mean, let's face it. I mean, I have worked with one of the largest industrial houses in India who, before even investing, the first thing they look is unit economics. Some of the largest, I mean, when we have conversations with our CEO and all, we know that, okay, this company has today come checking for funds. And we ask him, sir, kya hoga? Paisa dalne wale hain? He'll say that, nay, they will not put because it's a burn model. These guys launch something free for 1 year, which is again a strategy in itself, which was what? Acquired those many customers, and you have created that entry barrier now for anybody else to come. So it is more about entry barriers rather than the burn money model is what I feel about it. Yes, now because there is a flow problem, there might be a lot of concerns in terms of saying that, okay, fine. What happens when you have a lot of money on hand? You're open to a lot of ideas. You don't mind, like, you don't mind putting in 10 different places. But when your money is, when you're a Ambani, you don't bother about where you're putting the money. But when you're a middle class person like me, you think stock market kidhar ja raha hai, jar mein dalu paisa, gold mein dalu, yeah, should I put it in somewhere else like FD mein dalu? That is when, and today we can probably call it that situation. But it is always a cycle in terms of where, hidden aspects of every book. I mean, you take the 2007 crisis also, you look at it. It was all hidden in the books.
Yeah.
It was all hidden in the books. People went around buying it. Why? Because it was layered and kept.
Yeah.
So it's about burn versus valuations, how the we work, the valuation was doubled, right? From 40 billion to 20 billion it came down. Right? So it's all about that.
Valuations and all of those things are.
See, valuation is a perceived value. I mean, kya hai? Everything which, even rupees or money, currency is also just perceived value, right?
I mean, valuation is what somebody will pay for it.
No, it's a thing. If there is an assured pot of gold at the end of the rainbow, how fast you get there and how do you prevent someone else to get there? That's where the burn comes.
Yeah, the second part, more.
So if someone is sure that there is an assured pot, there is an 5 years down the line, 6 years down the line, there's an assured profitability in something.
There's
How do
nothing. How can you even assure a profitability 5 years down the line?
There are enough data for experience of as to match upwards. You can't go back to the old ways once you experience the new ways. They have a pot of gold there.
I slightly disagree with that.
No, it's up to
It's
you.
all the money should.
See, today's
It's up
economy
to
is
the
showing.
creativity of me to make sure that I make money there.
There's a creativity of you to tell that story for sure.
That's
No,
it.
but look at it, no. Data is showing it. Zomato is charging.
Huh?
Not everyone has to believe in every
No, no.
story, otherwise we would all be investing in every market, every
No,
public.
वो assurity अगर वो 60% भी assurity है, I mean, that is good enough assurity.
Yeah, see, the easy money that floats around is like 1-2%.
I know. That's what I was coming to.
It's nothing.
Whenever the stock markets will go volatile, आप किसी भी PE fund का देख लो, right? 4-2% 3% ज़्यादा VC money नहीं हुआ. They don't really, with all due respect, they don't care about it, right? The asset classes they're concerned about it, what the bonds are doing and what the equities are doing, right? If that moves even a little bit, they're going to say, "Bhaiya, let's concentrate on, let's look inwards, let's concentrate on जो हमें पता है.
No, 2008 was playing around with that 99.9% pool.
Right.
VC money is still 0.1%.
Yeah.
It's okay to experiment as much as you want.
I tend to believe that. I mean, sometimes you look, some of the greatest companies in the world have been born by way of VC funding, right? And it's about, how fast you can go. I mean, Mr. put it very eloquently, how fast you can go and sort of how much more you can create towards
That I agree with. That I agree
So
with. And
it's-
I think the
capital
way he
is
put
helping
it.
you to create that more faster, right?
Yeah, that's fair enough.
As simple as
But
that.
the only thing I'm slightly disagreeing with is that assured work.
A pot of gold, see, Nishchay, if I may add to that point, I mean, in the 90s, you could have invested in an Infosys or a Sterling Infotech. Now, Infosys, I still blame my dad for not putting in Infosys. Okay, but did I have that knowledge
Insight,
that day
exactly.
to tell Infosys mein dalo, Sterling Infotech mein mat dalo? Because that money which you put in Sterling Infotech,
Yeah, that is exactly, case
in
in
the
point,
2000s,
right? Nobody.
in the 2000s,
No, it's
Airtel
not like that,
invested,
right.
2000, Airtel invested in Telcom.
Huh.
And also you had RPG which was on pager. I mean RPG also had telco. But whoever invested in pager technology versus who's invested in telco.
Sure.
So see, it's there is gold at the end of it. That's an optimistic way.
See.
But all of it does not turn to gold.
See, for example, Tiger Global had clear playbook of how Alibaba turned out. So it was for them, it was a known playbook. It was a no-brainer when they took a call on someone like Kulkarni.
Right.
You had your local bias to think that India में कौन online India में कौन online payment करेगा. Forget buying something.
Right.
Digital banking कौन करेगा. We had seen that playbook play out in 90s and early 2000s. For them it was a no-brainer. It's all up to one's vision or imagination plus how much exposure they had in other markets in a particular space.
Yeah, so I completely agree with that, right? So I mean, Ray Dalio also puts it very well. Like you observe patterns in different geographies and different points in time, and you can try to say, यार ये जो situation play out हो रही है पहले ऐसे हुई थी और उसका end result ऐसा रहा था. So the probabilistically speaking, there's a high chance of success.
Yeah.
I'm just saying there's no assured anything.
Sure, no, what-
There's a high probability of that.
There is no,
Yeah.
I mean, there is no assurance that we'll get back home.
Exactly,
Yeah.
exactly.
That is sort of,
Yeah, but yeah, I agree. I mean, किसी ने वो playbook देख रखी है, उसने geography understand किए, they'll find the best players in that market and back that, and there's a high probability that might turn out to be a positive outcome.
There was one report from Google in 2008, in which clearly said that India will directly jump to smartphones.
Right,
जब लोगों के पास इंडिया में phones नहीं था,
right,
we had written a report that India will directly jump to smartphones.
right.
If someone, it depends on your conviction that how much are they are right. And then if you had invested in the right technology, someone like them who went on mobile much earlier, they reached the
Yeah,
And the amount of venture that is happening coming in India right now is also a function of sort of, which other market has that kind of depth
Yeah,
and the
ability to
breadth,
consume
to
that.
kind of consume that amount of venture right now. So, US is going towards
Fair
to
enough.
China as a closed market, whereas.
No, nowhere else. Absolutely.
Actually, there is a lot. It's just that, there is a lot of venture that is happening in India because of the fact that the market has the potential to, and we are a very young country, right? 65% of the country is less than 35 years old or something like that, right? Look at where it's going to go, right? And stable government, a stable sort of financial system that has limited exposure to international markets, etc.
No, you're absolutely right. I mean,
there is a reason why venture is chasing India.
I mean, UK inflation is 7-8% for the first time. Is 1.25% interest rates. US is
It's
going.
not the conversation we are having in like this, like someone sitting in say some part of Venezuela, right?
No, absolutely. I think relatively speaking, if the next set of alphas is going to come from, and you can, with high degree of probability, say in any democracy, I mean, India is an obvious choice. And to all the points you're saying, young country, RBI, the UPI framework, and the government's looking at the right things. I think it from a macroeconomic standpoint, it just no doubt about that.
Not just that, people who say they funded one large company and say, okay, number of talent who come out and start, they will get the first checks from the same guys who invested in the company which failed.
Absolutely.
So the learnings and all of those things, it all compounds over a period of time. No money is going to be wasted for sure.
Fair enough.
I have a slightly different question here. So as we are talking about these startups and economic downturn and fintechs and edtech, it's supposed to be the rising industry. I mean, it is indeed. So where do you see fintechs and how, I mean, do you suggest fintechs as one of still a booming industry? And just few days back when RBI circular had come, if you would have heard that about the BPI's regulations and other things. So if I remember, China did the same thing just a year back. Similar thing what RBI is doing. So what is your suggestion over there to be started? Because I'm sure people over here must be aspiring to be a start a fintech or maybe a tech. So what do you feel over there, or you see we are changing any regulations over there?
See,
I mean, first of all, congratulations to all three of you for your success stories. Every story is different, and yes, where you guys have reached, absolutely commendable. So congratulations, definitely. Yes, you can answer.
Thank you. See, RBI and all these guys are there to protect the common man in India. I don't think their moves will be as China skew, is what I personally believe. And on top of that, as someone said, someone figured out a loophole in the system
Yes.
and doubled down on it. It would have been much safer if you had aligned with them from day zero, aligned with them, work with them to give you the right framework to operate and all of those things. At the same time, startups is all about finding those ventures and going deep into it, and so that you can drag it open and make it much larger things in the there's no fun without having those uncertainties at some point of time. But I'm just curious, probably what fintech has really shown that is that banking was not reaching enough people by themselves. Currently, if you take banking as itself, right, forget everything will fall in place. One thing that is there. First and foremost thing that we need to address is there a gap in the market which needs to be filled? If you take banking, for example, it's broken beyond intelligent. I have only one bank account since I started earning. It's been 17 years. And I have bought 3 cars till date. And all my bank car loans was from different banks. And insurance against that was from different bank. They are not realizing the true potential LTV of the consumer. And it's not even possible to expect a true potential LTV of the consumers because the kind of adoption that these guys have to make to the technology to realize that it is not there in them. It's like me asking my dad to build the next Alexa. It's not possible. The kind of leadership sitting at all these places are there. And apart from that, no innovation has happened from an internal guy. It has always been forced upon them from some external. And what fintech is doing is forcing upon innovation. Maybe RBI has stopped for a while that, okay, let me take a look at it, what's happening. And then they will probably come back with more better frameworks for people to work with. We have to continuously adopt and continuously evolve and continuously be relevant. And end of the day, money moves. Money is a social construct. It has to exchange hands, and it will get only efficient as the days progress. So it's for us to figure out continuously to work with regulators, banks, existing ecosystem, end of the day people. Once people start using it, no one can stop it.
No, that's you rightly mentioned that yes, fintech has definitely, bridged the gap between the consumers and what banks does. So that means yes, and as far as like the loopholes are concerned, yes, definitely there they see that as an opportunity, and that's how they take it. What I would like to say here is the kind of, yes, the regulations that a bank follows is not mandatory for a fintech to follow.
To think completely radically, in age of UPI and technology, why do you need banks? You can directly have a bank account with the RBI, right?
That is maybe. I'm not denying that, but yeah.
It's a very fair point, right? Why do you need banks?
So that,
End of the
again,
day, bank is, RBI is underwriting your transaction.
absolutely.
Then why do you need banks in India?
If RBI starts operating the banks,
Isn't that the
then,
premise of DeFi protocols?
Huh?
Isn't that the premise of DeFi protocols and the proof of concept blockchain that RBI is trying to build?
Again,
That's a completely different rabbit hole.
different, like, why do you need banks? That it doesn't make sense.
Precisely, yeah. Banks are not needed. That's what I'm seconding you on that.
no, I don't think RBI can, control everything. As far
Yeah, in
as,
the age of tech.
if you eliminate bank,
Oh, in the
right,
age
and
of
keep the
tech.
fintechs over there,
I think we should probably get into this conversation
Okay.
and
No, it's a very radical
session.
thought. I keep
Yeah.
thinking about this, that's why.
It's definitely an interesting conversation, and specifically when you came to DeFi, that is when I'm like, yeah, if we get into DeFi, so it's going to be a completely different rabbit hole altogether. But yeah, coming back to a couple of things that I still had in mind about this. So Chiranth, I wanted to specifically, talk to you. From the point of view of Riskcovry per se, and since you have also been investing in startups, so there's a four questions that I want to speak to you about, right? So one was that you said that you pivoted in the starting of your journey. I mean, if you guys remember when he was talking about Riskcovry, he said that he pivoted early on. So from a policy builder kind of a model to something that became, what do you say, an enterprise-based model. So that was essentially, if I'm putting it correctly, it was a transition from a B2C to a B2B kind of a model.
Yeah.
So one question is around what made you do that, right? What essentially triggered that transition or a pivot? And a bit more essentially about how did you start scaling up the B2B piece, right? So when you entered into the insurtech segment, I'm pretty sure you were either the only or probably a part of the top two or top three, maybe only two or only three insurtech companies, which was building insurtech APIs, right? Or which was creating that middle layer for insurtech to basically enable embedded insurance products. So how did you go about because at this point of time, I think you also had to face the problem of creating the awareness. कि यार ये चीज़ नहीं है जो हम लोग कर रहे हैं, and this is why you need it in the first place. So how was that entire journey and how did you go about that? And secondly, okay, let's address that question first. Then I'll come to the macroeconomic perspective. That I was talking
Just
about.
to add to that, what does B2B scaling up look like, right? Because as long as I speak to B2B founders, it's almost like, oh, I'm approaching this person, and it's going to take like 15 odd days to get back, right? So for those 15 days, what exactly do you do, and how do you exactly utilize that time to or scale up, right? So B2B scale up is completely different from what Nishchay just mentioned, like content doesn't play a big role. So yeah.
Just before, if you have a 15-day turnaround, please. It doesn't know how you make that.
We actually have 1 week turnaround, but that's if the product is already there and all of that. So, a fair amount of overlap in the second part of what you asked and what Chiranth asked. So answer the B2B scaling part secondly, but as far as the pivot itself, it was really not a passion space, as simple as that, right? We just didn't want to build something that was too ops heavy, didn't have too much, legs in terms of tech and data, didn't want to put an army behind sales conversions and all of that, just didn't excite us as founders. So, we kind of, and then sort of, my co-founder still sort of, we debate whether it was truly a pivot or not, because there's a fair argument, because one argument is your go-to-market change from B2C to B2B, but the other side of the argument is, well, you're building tech, and that tech is going to get positioned across the world as far as this particular space is concerned, to figure out product market fit across partner segment. So we were just on a journey to figure out that product market fit anyway with the right partner segment. So with that sort of, if you take those sort of, startup nomenclature aside, really the journey has been about, again, I think it's every company that starts, whether it's an SME business or it is a startup business, and where you raise money, you don't raise money, at the end of the day, a founder is coming from a place of passion, right? An entrepreneur wants to kind of do something beyond just earning livelihood. I would like to think so, at least. There is obviously merit in thinking that, धंधा चलाना है, घर चलाना है, बस, right? But I don't think, those kind of businesses really make a deep impact in the world. A deep impact in the world is when sort of teams are coming from a place of passion and place of some missionary founders, right? So in our case, it was really about, we really had a very strong view of the world that insurance is super underpenetrated because it is not ubiquitous. And insurance is a fundamental right of everyone. Nobody can predict the future. And as humanity, and going into some really esoteric stuff here, we have not come up with a better solution. Capitalism has not come up with a better solution in terms of retail risk management as insurance has. Right? So there are 5 fundamental financial services, right? There is payments, there is savings, there's core banking, your CASA and all of that. And there's credit, and then there's insurance, right? So if you think about what is the final frontier of fintech, if you will, in terms of where there was innovation depth needed, that was really, from our perspective, it was insurtech. So we came from that passion space, and we came from that sort of a missionary view that insurance should be democratized, and for it to really be democratized, you either build a brand or you build a force behind the brand, which means that you democratize that entire thing using technology. So that's where the aha moment was, that that every insurance product is now an API. So if you can build an API infrastructure across a bunch of products, across a bunch of insurance companies, and build that critical mass, and goes back to scale, the B2B scaling bit. It's a very broad question, so I'll contextualize it to our business model. Our business model has 2 parts of the coin, right? We are the middleware, the technology stack that sits between anyone who can distribute insurance and people who can underwrite insurance, right? Or insurance companies and distributors. So we are the middleware platform, right? That sits between the two. And for our business model, there are 2 sides of the coin. One, you need to build enough critical mass of insurance products and APIs and enough insurance companies so that it becomes relevant for the other side. And this was a little bit of a chicken and the egg, because insurance companies then will sort of take you more seriously if you have enough distribution. So for us, any new market that we crack, we have to crack the chicken and the egg, if we are indeed going to progress with the same business model in every market, which is the infrastructure part. So the 2 parts of our business model, one is critical mass building, and second is finding the right kind of, partnering up with the right kind of partners who can indeed distribute insurance. Not everybody can distribute insurance, right? When I say everybody, not every enterprise can distribute. It has to be the right product, the right channel, the right sort of, a bunch of things. So in the startup world, there is this PMF, product market fit, right? We internally call it, for each of our, at a partner level, we call it, product channel fit.
Okay.
So there are 3 fundamental channels of insurance distribution, which doesn't change by market, doesn't change by industry. Either go buy insurance yourself, DIY, policy bazaar mein gaye, product kharid liya before getting a call, right? So that's your DIY journey. Then there's the assisted journey where somebody, there's a human interface involved, the agent, either sort of, someone on the tele side to kind of sell that particular product. Or third is, which you are referring to as well, embedding insurance. Insurance happens on the back of some other product or service. For example, getting home insurance on the back of a home loan. Right? So that is the biggest buzzword, one of the biggest buzzwords in fintech right now, embedded finance. Same thing is happening in insurance. So for us, the B2B scaling mantra is really about how do you crack the chicken and the egg for each market that we want to enter as far as infrastructure strategy is concerned, by building critical mass on one end and be the fastest to get to critical mass, and get sort of really good partners early in their evolution, such that we can build the insurance distribution book at scale by experimenting with a bunch of channel product fit thesis. So it is all about that. So think of us as any startups in the room, who are thinking about distributing insurance or adding insurance, if that becomes part of your roadmap. Would love to talk to you to figure out sort of think of us as your experimentation bed, right? Your experimentation sort of bed to kind of think, to layer upon insurance and do it with the right intent and with the right strategy. And we have
essentially what we have program managers for payments. It's kind of like that, right? So we don't necessarily have to build the tech. You have those embedded systems at the back end.
So the closest analogy is really a payment gateway. one of the aha moments in our journey was really that if you think about any industry, for us, a parallel industry of innovation for us was really payments, right? Because payments was payment gateways it's B2B2C, you don't really own the end consumer. It is sort of, it is an experience that everybody wants to have a good experience, but they don't really have brand recall. Like when was the last time you went to an Amazon or any of the online e-commerce merchants and were focusing on the brand of the payment gateway? None. You want to have a clean, good experience, so you want to remember the experience, forget the brand. So that was the aha moment for us as well. One of the aha moments that this can happen in insurance as well. We can be B2B2C and not be a brand and not put an army behind it to kind of thing and be a tech player. Now we have got sort of close to 200,000 API calls being done on the platform every day. So there's significant amount of data that is passing through, and we are building sort of amazing, some really cool sort of algorithms to figure out what insurance product can be best accommodated in which channel by which distribution partner to enable distribution partners to, in terms of their sales throughput of insurance distribution, right? So, the scaling really is about sort of, the infra becomes the wedge, but then all these sort of analytical smart solutions to help you become a better distributor. That's where we see a lot of our.
So that becomes a retention tool, right?
Yeah, I mean, see, we've had zero churn, right? So far, and the way we define churn is if existing partners signed up with us, stopped doing business with us, and went ahead and built the tech themselves, or went to a competitor. That has not happened so far.
Got it.
Because by definition, infrastructure is something that is very embedded into sort of the systems of.
If it works, then nobody wants to change.
But not it doesn't work. It's not to say that it works every time. Right? So the biggest learning was on the back of the pandemic, right? So we grew sort of exponentially on the pandemic. We couldn't keep up with the demand, but also a lot of that demand was very short term, very myopic. Fintech companies that are doing credit, credit mein bun raha hai, credit mein bik raha hai, insurance chipka lo. That kind of stuff also happened, and we didn't know any better. Some of those partners came through the door, right, and didn't go anywhere, right? So there is those things also happen. So for us, it's very important that the right partners we let through the door.
But how do you essentially, I'll just come to you. So how do you essentially address that, sales cycle problem? Right? B2B, when you try to scale up B2B, the majority of the problem arises when you consider the sales cycle or the conversion cycle. Since I have been a part of B2B business and I have been in that cycle, it's like a 30-35 day thing, like when you essentially originate the lead till you actually sign an agreement till the go live. It's almost a 35 to 40 days process if you're lucky. Like these are 60 days.
I was trying to say you're lucky if you're like under a month. It depends, right? So then you have it comes on B2B enterprise tech is a lot about it is about having a very efficient sales pipeline, making sure the top of the funnel is robust. You're moving those well. So you're from the top of the funnel to a lead to a prospect to a near closure customer to a customer, right? It is you need to keep that pipeline robust and healthy and sort of there are two parts of the business for sure. There is building and shipping, right? And the shipping part is push, right? It is somewhat push because any enterprise tech is push from that sense, right? So there is nothing different that we do. It's just that in our case there is a fundamental user behavior shift towards insurance that has happened on the back of the pandemic. So we fundamentally believe that what happened to digital payments on the back of say demonetization, where there was a fundamental user sort of behavior shift that happened, which was somewhat forced. Here it's happening to insurance on the back of the pandemic, right? So, and when sort of your insurance and your sort of entry to insurance starts with your own health or a family's health and or a life or a family's life and all of that, then it cascades into assets protection, etc., as well. We are seeing that, right? We are seeing people like we are on the path very close to securing close to 1 million lives on the platform, and of which a lot of them are first-time buyers of insurance, and a significant of them are women from our women demographics, right? I mean, financial decisions was not sort of and we are seeing that change. So that is fantastic, and sort of goes back to one of the earlier questions of we are venture funded, Series A last year, and there are two ways of building this business out. There have been businesses like in infrastructure businesses like M2P and whatnot, amazing business models, and they were profitable even before they raised a dollar. Right. So, but in our case, and they did the hard part of building critical mass completely bootstrapped. So for us to be able to do that, would have sort of lost on a lot of time. So we had a conscious decision to kind of raise venture, and that has helped us to kind of fuel our growth. And let's see kind of it goes. I mean, it's an interesting. The good part is, and we're talking. I think someone's talking about how big fintech and all of that. Financial services is between a fourth to a third of market GDP of the entire world in terms of market size of financial services, right? Because money movement and everything to do with money is a very sort of an important thing, and insurance is a $6 trillion market globally. $6 trillion, right? Globally. Not even sure how many zeros those are. And why is there no insurtech global winner? Right, so that's the question we kind of ask ourselves, and that is fueling our growth into international markets as well.
Understood. Excuse me, question.
Question to Nishchay actually. You mentioned about the primary goal being, and this is more in the go-to-market segment, about the goal being allowing people to invest, right? And allowing people to save and not invest. So how many of these 8 million users that you currently have are outside of the 3.5 crore retail investors and equity or other securities that we talk about? And the second question is, since you mentioned you chose content as the primary medium of reaching out to people, the ideal target audience for content might be people below the age of 30 who predominantly spend time on social media. But this is also the segment that's very open to the idea of investing in, is particularly in high-risk asset classes. And for them, being self-taught is not a significant concern, like how you mentioned, about the thought of, about the idea of teaching people about savings and investment. So it's kind of paradoxical, right? So is your 8 million user base significantly outside of, this segment? And if that is the case, why did you even choose the mode of content?
99% users are first-time investors.
Okay.
They've never invested in the past.
Okay.
All of my users are middle-class folks. Graduates in their first, second, third jobs. The average age of Indian to start earning is 20, and average age of Indian to start investing is 30. There's a decade gap between the first rupee made and the first rupee invested. People think that this is something I do when I get old, and this is something I do when I have a lot of money. That's why there's a huge gap, and we are bridging that gap. And content goes not just for acquiring the consumers, for retaining the consumers, for engaging the consumers. When I say content, it's not like 7 ways to get rich or don't do these three mistakes while investing. Content can be really fun, really engaging, really simple. For example, we figured out that people open the app for no reason. Why? And they may be opening to see how much savings they have made, what is the current gold price, or whatever it is. So we are thinking he has gone through 7 decisions through in his mind before he reached that screen. Pick up the phone, unlock the phone, look for the app, click on the app loads, then unlock the app, and then 6, 7 decisions have gone through. Now his 8th decision should not be, now you have to get him, like, aage pakad ke kuch karna. That's very clear. Like, now you have to give him really simple, zero cognitive load action to take, where he doesn't have to think too much. So we came up with simple card, which says something funny and asks you to invest 10 rupees, nothing less, like nothing great, not even more, 10 rupees, that's all, because it's all about habit creation. So that card simply says, we built like 1,000 limericks. Every time you open, it says something new, and it's all funny. When you open, it says, "Aage 10 rupees to deke jao." Or like, "Chalo aaj maa ko kuch kar de."
So by content, you mean typically in-app content, not
just
okay.
Content from where you first stumble upon your product to what makes him install, what makes him activated, and and what keeps him engaged and reading. So we made really fun things like तुझे आज वो 10 रुपए की जरूरत नहीं है और like क्या करोगे इस धनराशि का. We made it absolute fun for them and they end up investing. They do a lot of things. And the WhatsApp updates that we send and all of those things. They're coming up with one more new feature which will go live probably tomorrow, and it's going on Monday, and it's again completely content driven and it's completely fun. You need to demystify. You shouldn't make the moment you open a investment app, without your knowledge, you become very serious.
Yeah.
It need not be that.
Very interesting.
So I have a question, right? Like coming to content, like you have also roped in Nana Patekar for like one of your welcome ads. So like, what are your thoughts on this ATL advertising, and is that still in play?
You are buying credibility, you are buying trust. Or else you are just an ad on Facebook or Instagram somewhere. The moment you appear on the large screen or the print media or the billboard, you are a big dog. So people will trust you. You are buying credibility, you are buying trust, for which you can't escape the need of.
Okay. On that note, I have another question. Are you guys also building IPs? Like, since you are very content centric, like, are you building IPs around, maybe like teaching?
No, people don't have patience. People have rats. Attention span. You can't catch hold of him and make him even watch 10 minutes video. The see-through rate will be really low for all these videos. Video or long-form content is not the solution. At the same time, Instagram reel kind of a thing, and snackable content also will not lead to actions. Innovative engagement with right messaging engages the consumer and makes him do things.
So interactive is focused.
Yes, and getting something, I mean, if anything that doesn't lead to an actual action right away, we will not do that.
Okay.
Where do you draw? I mean, obviously you seem to have understood your persona very well, and you kind of it's very deep rooted thoughts that you drive from. Do you talk to your consumers a lot, or where do you drive these insights from?
First thing, I've been that shitty guy, as I said. 20th I used to be out of cash,
Right.
and I have given myself enough excuses not to save.
Right.
And I am the guy who is saving good enough now.
Right.
So I've been a user myself. Plus, we are super obsessed with our consumers. I think on an average I speak to 100 users every month. For the first 120 days, we did not have a customer care team. I was the customer care guy. Whoever reaches out to us, I'm the only one who was responding to everyone. And we decided we'll go on WhatsApp, not on call center and all of those things. The reason why we chose WhatsApp again was WhatsApp has trained us to be asynchronous in our communication. For example, you message me at 7:30, I reply you at 8, and you reply me at 8:30, I reply you at 9, and you reply me tomorrow morning, and I reply to you tomorrow afternoon. People are very comfortable. And on WhatsApp, as a chosen, it's not like a chat window opened or a call happened where call dropped off. You again have to go through that IVR and all of those things. WhatsApp has cut through all stratas. Everyone understands WhatsApp. So for us, all the touch points that we wanted to create, for example, I derive my inspiration from, say, Indigo. Indigo Airlines, they have, the way they have created the entire Indigo touch point, they have their brand signature on it. What I took out from that is we have to create touch points which people are very familiar with and comfortable with. And that drives our continuous user engagement and understanding. And we are data obsessed. Thanks to me being second time and all of those things, we went and integrated all analytical tool from day zero. And we look at dashboards. We are obsessed with data, to be very honest. We look at it very incessantly. And we are building huge AI layers on top of it, which is powering. For example, as I said, you open the app, it says 10 rupees to dekhe jao. Now what we did is the AI powers, we know your propensity at given point of time. For example, say you open the app on 5th of the month, where 90% of your paycheck is still there in your bank. We show you 501 rupee based on how much you have done in the last 1 week or last 45 days, last 60 days. Or if say it's 25th of the month, you have 10% paycheck left in the bank. Should I show 10 rupees or should I show 500 rupees based on how much you have done rest of the month, what has been your score in the past, what phone are you on, what city you are in, everything. We take all of those things into consideration and we do candidate generations. It's purely machine learning, it continuously learn what you do, and it drives the behavior out of someone else who comes from a very similar profile to the next user. So a lot of things drive the systems.
Just one more question, which might rather seem naive, but adding to your point about, you mentioned, you're essentially buying credibility when you go for these campaigns. Particularly, I mean, I watched a Prakash Raj ad and someone mentioned Nana Patil. When it comes to these actors, how do you think they bring in any credibility in terms of finance? Like as a regular audience, if Prakash Raj is advocating a finance product, why do I even go for it? And I'm asking this from the standpoint of how do you really pick your, artists?
So we are a very young company, we're just 1 year old. So what we thought is, I took a very old school FMCG approach for these products when it comes to the branding, storytelling and all of those things. We decided that the objective of this year's campaign should be only one thing. That is, people should know that there's a company called JAR and what are they related to? Savings and nothing else. I did not want it to go and explain how we do it, why you do it and all of those things. And again, narration, we wanted to be very uniquely placed there. We did not want it to sell any particular instrument like an insurance company does. We want it to be very relatable from their thought process standpoint. For example, in the reason why we went with all villains in the first campaign was that in movies you shout bachao when a villain comes, right? And we did that subtle connection that in life maybe don't wait for that actual villains to come to start saying bachao.
Okay. Thanks for the clarity.
Great. So I think I have two closing questions. So one is that, as Chiranth rightly mentioned, right, scaling up is there are two parts of it. One is the building part and one is the distribution part, right? So when it comes to the building part, I mean, all three of you I think spoke about the distribution part, but more on the building part, how do you see it? How do you kind of deal with that, right? Because as a product, when you're just starting out, do you just focus on one to the product goes till level 10 and a certain level of customers are happy and then build onto the product, or do you just simultaneously make another product that you have in plans and scale up with that side of things? So more on the product side as well as how important does the team building role plays in scaling up? So if also if you can give better views on that.
So, Bob, just before I start, one thing that I would also like to add to it is that this is something that I've personally experienced as in my current organization as well. When you're building a product is when you come across a few more problem statements that needs to be solved. So you're building A and someone comes, when you go to a prospective customer and talk to them, specifically in B2B this happens a lot. The customer will come and tell you, this is also a problem sheet that I'm solving, and if you solve for this, I'll also be able to adopt B. Like adopt A if you solve for that specific problem treatment, which is essentially an ancillary of the product A that you're building. So in that case, do you also, all three of you from a B2B as well as a B2C perspective, do you essentially let that piece aside and if you don't have the bandwidth or something, it's a different story. But otherwise, do you grab that opportunity and build that A along with the ancillary B so as to create essentially a mode that would essentially hold the customer in, or do you still focus on product A specifically? I mean, what factors would that essentially depend that on, and how would you take that call?
For us, product is always like 90% of the efforts will go into that one core of it, continuous content and create more hooks. First you hack, first you figure out your activation, then once the activation is done, you work on D1 to D3, D3 to D7, D7 to D30, then D90, all those things. It's a process that will continuously go, and 10% goes into experimentation, and we give that liberty to the entire team. This is my second rodeo in the whole startup world. We have done enough mistakes in the past to make sure that we don't repeat them. Make new mistakes, basically. And apart from that, team-wise, again, we work with teams, social cost. 18 lakhs for a year versus we are working with engineers who will cost you probably that in a month. Team plays a very crucial role, especially this. We knew that the systems have to be super scalable. We clock over 200,000 transactions a day now. And we went from 0 to 200,000 in 1 year. So the systems had to be super scalable from all aspects. And for that we needed top talent. We went with top talent from day zero. We did not put out a scrappy product at any point of time. We went with the best of the best talents from all spectrum, from product, from engineering, from infra to iOS and all that. A product team played a very crucial role for us.
Understood.
So, I think it's a very style for us. It has again we pick a product, get it to good scale, get it to a point where it is well used and it is growing. It has some tailwind with it. So that's how we've been approaching things that we do. And team building, I mean, for us, by the time we got to Saarathi, we were slightly sizable. It was not very difficult for us to get people there. Initially, it was a huge challenge. We had to throw in God knows what all to bring people in. But of late, so team is crucial, as Nishchay mentioned. Team is very crucial in today's world because
For the consumer or sort of the enterprise consumer, because at the end of the day, what they are doing is using our one API kit, right? One unified API kit that cuts across X number of insurers, Y number of apps, Z number of channels, blah blah blah. So there's a lot of complexity going, behind the hood. But in the front end, it is just one API, right? So for us to get to that point and all, and continue to kind of innovate and all of that, there have been a bunch of sort of learnings along the way. And this playbook was not written, obviously. So we had to kind of understand that from first principles perspective. So really, when it comes to scaling any part of our business, I think the thing that has stood the test of time for us is really to question it objectively, use data to kind of see whether it is making sense or not. Really go by first principles, right? Otherwise, it's like you can get carried away because something may have been tried in the past, and you try and replicate the same decision because something has worked or not in the past. So we kind of question every part of the call it platform building, and that has kind of helped us to kind of scale. Obviously, completely resonate with both the gentlemen here. Team is everything. Just to juxtapose the importance of team at this point in time, right? So I was just having a conversation with the VC, and they said one of the things that I heard was quite interesting. Said and nobody knows whether this sort of what we call this winter and all of that. So one end of this entire spectrum is this for funding winter, where everybody's painting, where a lot of people are painting a gloom and doom, right? Especially in Western markets. And then there's this other part of it where people are saying there's so much of dry powder that is there, so much of money that has already been raised, it has to be invested somewhere, right? So because every fund has mandates, etc., as well. Nobody knows the reality. It is probably somewhere between the two. And you hear about 6-month winter, 12 months, 24 months, whatever it is. I think as far as team is concerned, if you don't need to raise money, you don't raise money is the general consensus that we've been kind of getting. So it's a function of your runway and your growth roadmap, how much you want to raise during this time. But from a team perspective, one thing that we've been hearing, and it was quite insightful, was that your core team should not go in this speed. Your core team is like that, and even if you clock about 1500% year-on-year growth, that's good enough. You don't have to do the 25-30% month-on-month growth and all of that, which becomes difficult during this time. Especially if you don't have enough money, right, in the bank. So, but the core team, to have a core team that that is just not your founding team and then sort of the C-suite team, but the team below that, right? that has to be airtight and that has to be intact for the next couple of years. It's going to be a marker of how people will potentially assess companies coming out of this winter period.
So from this, segueing into the last question for this specific session, so we'll start with you. Specifically, three things that you as a startup would essentially do or are doing to essentially secure it for the next 2 to 3 years if the funding winter happens or if the economic downturn happens, and essentially something that you feel other startup founders should also specifically do. So just top three things.
Top three, but one thing is just watch your burn. Watch your burn very, very closely. So we have been, doing that. Thankfully, we raised last year, so we've got this thing. Most of our customers are revenue generating for us. So we are sort of, in fact, this year itself, with our projections in mind, we can potentially check, turn cash positive, which is a great sort of milestone to hit because at that point in time, then the entire game only changes, right? Because towards looking at profitability and all of those things as well at fairly young sort of part journey. So that those are good sort of milestones. But having said that, it's really sort of watching your burn very closely, and if you are sort of not, this craft ventures had come with a video, not sure if you guys saw it. David Sachs, and it's a little bit more SaaS in nature, so not sure if everybody's seen it, but it's a really good video. I encourage people to kind of go see that, where they painted a picture of, if you are sort of less on growth and, high on sort of, burn, then that means it is going to be, it's going to be tough for you to kind of survive through this, so take immediate steps. But if you are growing well and sort of have enough cash, then don't raise. You don't need to raise. Don't raise. Because you're not probably going to get the great valuations that you probably got in 2021 time frame. But the oddball is if you are sort of have sort of some growth and sort of some cash to kind of power through this thing, that is where sort of some judgment calls are required from founders. So there is no one size fits all. It's really a function. So it's a very company by company perspective. But one thing is for sure that conversations are getting tougher. It is not what it was in 2021, right? So it is things are more drawn out, high due diligence, being revision to unit economics. A lot of things have been. Someone was talking about, pull and hold and all that. Right? So term sheets are getting pulled. SHAs after getting executed, then there's delay. All of those things have happened and potentially are going to happen. So yeah, just capitalize yourself, watch your burn, and drive as much growth as you can. But even if it is just 50, 100% year-on-year growth, that's okay. But your team should be intact because coming out of that, there is going to be a markets always sort of move right in sort of a certain set of cycles. So this is a lot of this is driven by the interest rates and all of that, inflation from kicking down from Western markets. We are fairly insulated here, but we are obviously going to feel the impact as well. Something like 2007, 2008 and all that, right? So that's the sense right now. I mean, smarter than anybody else in the room from that perspective, and a lot of this is borrowed wisdom from what we've been hearing. So I think the bottom line is just watch your burn.
Right. So being the bootstrap champion of the panel and the room, from your point of view, and specifically from Saarathi point of view, how would you essentially ensure that 3 years have at least a minimum impact or not any severe impact? I mean, whatever the period, not just 3 years, but whatever the winter, if it occurs, like it does not have that much of an impact. And 3 things that you would essentially say these are the 3 must watch or must do things for any startup to essentially try and survive through this.
I think these are times to get back to fundamentals. So that is how I see it. For Saarathi per se, we have started speeding up our cash positivity I mean, we are anyways not people who like losses.
Right.
Okay, but for the first time, we are trying something like that. So we're speeding up to reach there faster. We are looking at more avenues to kind of increase growth at lesser cost. So instead of having very linear, how can we make it non-linear and still have the growth?
Right.
But yeah, so I mean, last thing I would say, and this has been known forever, but when you are inside it, you feel कि अब तो दुनिया खत्म हो गई, ऐसा नहीं है. So there are still great conversations happening. There are still unicorns being formed,
Right.
or funds being raised. So it's not all doomsday, and this will certainly pass sooner than later. So what is important is to survive through this, which all should hold on to and ensure that we survive through it.
Understood. Nishchay, your overview on, since you have been on the B2C side, which is notorious for the cash burn, I want to understand how would you, specifically if you're addressing, let's say, a crowd of B2C founders, what would you suggest on like how to handle this entire situation?
Just to add, I mean, in such times, like recently in last 1 to 2 years, we have seen a lot of B2C fintech companies getting listed on markets, right? And now there's a debate between public perspective and VC perspective, right? So most of the B2C companies in public markets are falling out, right? And when it comes to VCs, have you seen any change when you talk